as the rate of increase in the U.S. Consumer Price Index slowed significantly in October. It is observed that the U.S. economy, with its strong dollar and high interest rates, has reached an inflection point. The perception that the U.S. central bank's tightening is over is rapidly spreading. In October, U.S. prices rose only 3.2% compared to the same period last year, as it fell from 3.7% last September. The somewhat hasty assessment that the fight against high inflation has passed the critical juncture in leading the market. Wall Street is hinting at the possibility of not only freezing interest rates but also lowering them, following the sharp rise in the New York stock market on November 14th. Korea also showed a large upward trend yesterday. On November 14th local time, the U.S. Department of Labor announced that the U.S. Consumer Price Index in October rose 3.2% compared to the same month last year. It is lower than the previous month's increase rate, 3.7%, and 0.1 percentage points lower than the expert estimate, 3.3% compiled by Bloomberg. The U.S. inflation rate peaked at 9.1% in June 2022 and then declined, falling to 3.0% in June of this year. Prices seem to be rising again at 3.2% in July, 3.7% in August, and 3.7% in September, as prices fell sharply again in October. There is a greater possibility that the Federal Reserve's interest rate hike cycle will officially end. Core CPI, excluding highly volatile energy and food, rose 0.0% compared to the same month last year. The slowdown in the CPI growth rate in October is due to the fall in prices of gasoline and used cars. As the October CPI increase rate was found to be below market expectations, market expectations for the end of interest rate increases by the U.S. Federal Reserve have increased. On November 1st, the Federal Reserve froze the base interest rates but left open the possibility of further increases. Bond market participants believe that the Fed interest rate hikes have virtually ended. The slower than expected pace of inflation have bolstered speculation that interest rates have peaked and that the Federal Reserve may cut rates in mid-2024. After the U.S. Consumer Price Index report was released in October, the U.S. two-year Treasury bond yields fell sharply, while stock index futures rose sharply. On November 15th, Asian stock markets, including Korea, also showed an upward trend. As the dollar weakened and foreign investors brought a large number of stocks in the domestic stock market, the exchange rate also promised Kospi soared more than 2%, and the Kosdaq index also rose nearly 2%, recovering the 800 level. The $1 exchange rate fell by 28.11 in one day. The $1 exchange rate closed at 1,301.80 yen, down 28.11 from the previous day. This is the lowest since August 2nd, when the closing price was 1,299 won. The interest on Wall Street in the U.S. is already shifting to how much the Federal Reserve will lower interest rates next year. Recently, global investment bank UBS predicted that the Federal Reserve may begin to cut interest rates starting March of next year, lowering interest rates by 2.75 percentage points.